So there's a lot to unpack there, and
Yes.
that's due to me asking such a broad question. I want to kind of touch on a couple things there. So as I understand it, so there's the it's access to high net worth institutional investors. However, can the average retail investor access this on a secondary market through buying shares of a private equity firm, not directly investing?
Yeah, so traditionally, no, right? Traditionally, you have to be what's called an accredited investor. Basically, you have to have something like north of $1 million net of your personal residence and make a sufficient amount of income. I think it's two to $300,000 a year to get direct access.
Mm.
So to your point, retail investors are not keen necessarily to
Sure,
be
sure, right.
committing $10 million to one fund. The other issue, of course, is that, how does the retail investor have the ability to make that decision on which fund to buy, right?
Mm.
So there's some reasons why it's actually a good thing that investors are protected, frankly, from investing in something that's rather opaque, right?
Mm.
But to your point about secondary markets, so because private markets are private, they don't have this like exchange mechanism we see in public markets where you can just hop on your brokerage and trade shares, right?
Right, right.
So there has been a growing market over the last decade, particularly since the global financial crisis, where there were a lot of institutional investors who were caught with all these, commitments, right, and wanted to get out of them. And so it's been growing since then. And secondary markets just means it's an ability for these institutions to sell their stake in these private equity funds to other interested buyers. Right, so it creates liquidity, if you will, in the market. And so other investors can get access to, say, the best fund from Carlyle if, for example, the Princeton Endowment, who's facing some political pressures these days, right, to get rid of some of their to reduce the endowment size to pay some potential taxes, right?
Mm.
So they'll sell it through a secondary market to potential buyers. And for example, I know Blackstone, has a pretty large secondaries fund where they buy lots of stakes. In fact, I think the New York City pension system just sold a $5 billion stake through a Blackstone vehicle in their underlying pension or private equity investments. And then of course Blackstone then has this fund and they can offer it out to other investors. From a retail perspective, right, do they have access to that? It's going to depend on the investor. And that's, more of a technical question, depending upon the kind of fund they're looking at. But for, this is what they call an interval fund, right? So interval funds are what are similar to closed-end mutual funds.
Okay.
Which are available to retail investors. So interval funds are one way to access private equity through the retail channel. Frankly, you can also buy the public equity of private equity firms, such as Blackstone, Apollo, KKR, Citadel, these kind of firms who have public equities. You can invest directly through these markets, the public equity markets. In fact, there's even ETFs that are investing in the fund, the stocks of those particular companies as well. So there's these sort of, the public market access you can have to those firms. There's the private market access through interval funds. There's also access for retail investors through business development corporations, BDCs, which trade also like a closed-end mutual fund. And these are companies that essentially issue loans, right? So these would be private credit to firms that retail investors can also have access to through the BDC structure as well. So there's a couple different ways that retail investors can get access to private equity, right, through sort of interval funds, ETFs, and the like, and then private credit through these BDC, business development corporations.
Okay.
The The opinions and statements presented on this show are for general information only and are not intended to provide specific advice or recommendations. Never make any investment or financial decisions based on information offered on this show without first consulting your financial, legal, or tax advisor. All economic and performance information mentioned on the show is historical in nature and is not indicative of any future results. All indices mentioned on this show are unmanaged and cannot be invested in directly. All information is believed to be from reliable sources. However, we make no representation as to its completeness or accuracy. Lastly, all opinions expressed by Jason Cutitta and any guests on the show are solely their own opinions and do not reflect the opinions of or are endorsed by ToBA Financial. For Jason Cutitta, investment advisory services are offered through ToBA Financial LLC, a registered investment advisor offering advisory services in the state of Hawaii and in other jurisdictions where exempt from registration.